Welcome back to America's Voice Live. I'm Mike Garofalo. Joining us now is Sam Sorbo. Sam, we're going to talk business. I understand during your segment here, you're going to talk to a CPA how businesses that are going through a tough time right now might be able to win in the long run.
That is the plan because we are all suffering under COVID. And as we covered earlier, the government seems intent on keeping businesses closed. But Eric Pierre is a certified CPA. He's a long established career in tax and finance. And so I'm bringing Eric on to talk to us about how you can maybe lose in the short run, but win in the long run. Eric, welcome to the program.
Thank you, Sam, for having me. Absolutely. Sometimes you have to lose to win.
So, and what do you mean by that? Just start us from the beginning here, because when I saw that, I was intrigued. Okay, lose to win. What does that mean?
Well, the government is giving some, unique tax breaks under the CARES Act. So, for instance, one of the big bombshells was that, under the Trump tax law, they had suspended net operating losses, but now you can carry them back 5 years, starting December 31, 2017 to basically January 1, 2021. So, if you made a bunch of money in the past and you have a big loss because of these things, now you can go back and get that money that you paid to generate cash flow. So that's a great example.
All right. You also talk about payroll taxes or payroll tax deferral.
Yeah. So the government's allowing companies to defer the Social Security portion, which is the 6.2%. And so you can defer it from March 27th of this year to the end of this year, which is December 31. The first half of that deferral is due on December 31, 2021, and the next half is due December 31, 2022. Now, if you do receive a PPP loan, you're not eligible for this. But if you didn't get it, now you have some spare cash flow to keep your business going or to maybe make some critical investments during a time like this.
What about the employee retention credit? I'm sorry, folks. This stuff is, but we want to help people who have small businesses, right?
Oh, absolutely. So the government's basically giving a credit up to $5,000 per employee, and you're eligible if your business was fully or partially closed due to government orders, whether it's from the federal government or from your respective state or county. And you have to have at least a 50% drop on your gross receipts year over year. If your drop is 80% or higher, if I didn't say that right. So 80% of your revenue from a year ago, once you hit that threshold, you don't qualify. But if you have a significant drop, this is also a refundable credit.
Okay. Let's talk about commercial real estate. What about, because, and I'm seeing, so in commercial real estate, my understanding is that there are about 11% of leases that have to renew each year. And we're going to see a lot of drops in the number of renewals, I'm imagining, because a lot of these mom and pop shops are probably not going to be renewing their lease without any kind of significant security in what's happening with the economy. So can you speak to that? Can you speak to real estate people?
Yeah, so for real estate, if you own commercial real estate, there's a couple things you can do. The IRS just expanded the definition of qualified permanent property or QIP. That depreciation period is 15. So if you own a commercial building, you should get a cost segregation study done because it'll help you identify the QIP. That allows you to accelerate the bonus depreciation to 100%. And we've seen business owners get anywhere from 6 to 7 figures in immediate cash flow because of this strategy.
Now, you talked previously about carrying over business losses, but I'm sure that people are experiencing business losses right now. What if you didn't have business losses, but now you're having them? Can you somehow capitalize on them faster than you would have otherwise?
Yeah, so if you had a loss in 2018, they did not allow you to carry it back, but now you have until June 30, 2020 to go back a few years to get it. If you get a loss this year or next year, you can go back 5 years to recapture taxes you paid for losses that you get this year. Because for some businesses, they're probably not going to see the loss till later this year, or because of how things played out, that loss may not happen until year 2021. So they're giving you a window to go back and get money that you paid to inject some capital into your business and for you to keep your doors open.
Talk to me about sick leave and paid family leave and those kinds of things. Are there any kind of reprieves for small businesses or large businesses for that matter?
Yeah, the credit for paid sick and family leave is for businesses that have 500 employees or less. And if you qualify under the Families First Coronavirus Response Act, you'll be able to fully get credit for all those paid sick leaves. And that credit is directly applied to your employment wages, meaning that your payroll taxes at year end may be substantially less, or you can be eligible for a refund.
Right. I imagine that a good CPA will have a firm understanding of all of these things. I find it terribly intricate, and frankly, it makes my eyes glaze over. But I was listening to the roundtable that President Trump had. I think it was day before yesterday with restaurant owners, and one of the owners he owns, I think he said it's over 100 restaurants, and they're high end restaurants. And he said the PPP didn't help him at all because, in fact, he's a full conglomerate, and so he doesn't have separate entities, so he doesn't qualify as a small business. So the PPP doesn't help him at all, and yet he still wants to keep all of those restaurants operating, and they all operate virtually independently. What do you suppose you could do for him?
We would probably do an analysis, and then if he's still keeping his business open, and he's hemorrhaging losses, he's going to probably be eligible for the employee retention credit. And I also would tell him to take advantage of the payroll tax deferral, because even though most state orders are doing 25, 50% capacity, you still have to pay 100% rent to your landlord, even if you defer it. So those are two things that I would recommend to generate immediate cash flow to keep the business going right now.
Right. All right. I understand there are also business grants from local communities. Can you talk to that a little bit?
Yeah. So, I'm here in Austin and, nearby county, Williamson County. We helped a client apply for a PPP grant through the county of $15,000. So we recommend that you go to your county's website and check, because you may be able to get a PPP loan without going through a bank. And the federal government has already designated the fund. It is at the county's discretion to give you those funds. And it's a lot easier process, a lot less paperwork than what the federal government has if you go through a traditional lender or a commercial bank such as Chase.
Does it preclude the PPP?
No, you can apply for both, but the SBA is going to keep track of it. So, and you can still apply for the EIDL whenever they decide to open that up again.
So now let me ask you this, because we're seeing a lot of money flow from the government down into these businesses. What's this going to do to the economy in the long run? Do you have any predictions?
I'm not an economist, but I anticipate, unfortunately, later on, we're probably going to have to pay for this with higher taxes. And so it's important for every business owner to work with a good CPA if you don't have one, so that if and when that happens, that you can manage your cash flow and then take advantage of other tax strategies that we haven't discussed that can help you keep your tax bill low, because at some point, we're all probably going to have to pay for this.
Have you seen an uptick in business since this whole thing began?
Yeah, we've had a lot of phone calls. Everybody's been worried about the stimulus check. A lot of people don't understand the PPP application. A lot of bankers aren't giving a consistent message. So a lot of business owners also learned the hard way that not having good financials and taxes were hurting them in qualifying for these loans.
So when we started out, you said you have to lose to win in the long run. You were saying
Yes.
basically you got to take the lumps of the coronavirus and the lockdown, but in the long run, do you actually see this being somehow a positive for business?
Yes, if you're a business that's willing to pivot and take advantage of the capital, particularly if you own commercial real estate where they're allowing you to accelerate depreciation and invest a little bit. We've seen businesses that generate $3 to $5 million that can allow them to stay in business for their 5 to 6 years. That previously this situation would, under normal circumstances, they would not have been able to get that kind of cash flow.
No, I'm not understanding. You're saying that the loan for the PPP or for real estate. That go ahead.
Okay, so I guess I misunderstood your question. The PPP loan for some businesses is going to be really good because it's going to allow you to stay open. And if for some businesses that qualify, they're not having to worry about generating new income to pay their employees. So with everybody being at home, some of our clients now using that cash flow outside of PPP that normally would use for payroll to advertise since everybody's at home and, internet usage is up at an all-time high.
Okay, so that makes sense. So if you have that flexibility and you can pivot to this new normal, it can bode well for you. Eric Pierre, I want to thank you so much for coming on the program.